The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 30 August 2019. Straight up, Reuters, U.S. 10-year TIPS yield fall deeper into negative territory. The yield on the U.S. 10-year Treasury, inflation-protected securities, slipped deeper in negative territory on Tuesday as a result of intense demand for bonds due to trade and economic anxiety. Yields were at negative 0.056 compared with 0.001% late on Monday. Interesting times, folks. I've never really thought in my life that we'd see negative yields, not only on bonds anywhere, and of course there's several in the European sector, but of course on the U.S. as well. Lots of talk all week and actually for a few months here on this trade war. That seems to be getting more and more press, as probably it should. This is one that hasn't been talked about much, so I'm going to cover it real briefly here. U.S. cotton industry quietly faces crisis from China trade war. While soybeans have remained front and center in the United States trade war with China, American cotton is quietly facing its own tariff-induced crisis. Cotton was among the first round of agricultural commodities China hit with retaliatory tariffs in the summer of 2018. Well, I'm on gold here pretty quickly. I'm probably going to bounce around a bit on this weekly perspective, but this is from Reuters. Exclusive fake branded bars slip dirty gold into world markets. Gold bars fraudulently stamped with the logos of major refineries are being inserted into the global market to launder smuggled or illegal gold. Refining and banking executives tell Reuters. The fakes are hard to detect, making them an ideal fund runner for narcotics dealers or warlords. In the last 3 years, bars worth at least $50 million stamped with Swiss refinery logos, but not actually produced by those facilities, have been identified by all four of Switzerland's leading gold refiners and found in the vaults of J.P. Morgan Chase & Company, one of the major banks at the heart of the market in bullion, said senior executives at gold refineries, banks, and other industry sources. What I'm about to say is conjecture on my part only, and I believe I'm right. And that is that almost everything that goes into China is kilo bars, and that means that the 100-ounce, 400-ounce bank bars are being smelted and re-refined through the Swiss, primarily, almost exclusively. And I think it's not because they want kilo bars necessarily, but they want to make sure that they've got 999 fine gold. This little dirty secret that I'm talking about right now has come to the fore a few times, and it's been a while since China implemented this policy of kilo bars or kilo bars only. And again, not many people are talking about it, but I truly believe that is the reason why. It has nothing to do with size or manageability or weight or convenience or any of that stuff. It's get them re-refined, and it costs to do that, but you also know what you're getting, if you're getting 999 fine or not. And GATA, who's one of the leaders in information on the gold sector, silver as well, but primarily gold, just easily read the headline, gold hits record highs in euro and Australian dollar. Gold Core Marco Byrne reported that gold has hit record highs, and this, of course, is with gold hitting a 6-year high in U.S. dollar terms. And back to zero hedge. Argentina is officially in default again. S&P downgrades credit rating to SD. So, short-term rating of SD, basically they're in default, and this is not a big surprise. Anyone who's followed Argentina for more than on a cursory level, that's dove in just a little bit, realizes that this is sort of the way that this whole country operates, which is unfortunate, and yet, just borrow, and then default. So I won't read you the article, something that, unfortunately, here we are again. In fact, there's a documentary called The Empty ATM, which I used to promote somewhat for people to understand how this situation is and what could happen in the banking system on a bail-in scenario. And if you could find that, it was a PBS documentary called The Empty ATM. I don't know if you can buy it or find it anymore. It used to be available. I used to, again, promote it to people for educational purposes, but since then it's been, I don't think you can find it anymore. But regardless, Argentina default. Surprise, surprise. Another Reuters article, U.S. economy slowing, but consumers limiting downside. U.S. economic growth slowed in the second quarter. The government confirmed on Thursday, but the strongest consumer spending in a 4.5 years amid a solid labor market threw cold water on financial market expectations of a recession. Blah, blah, blah. I'm on record, as many others are as well, pretty much, I guess, on the alternative side, saying that we will be in a recession and things are not as robust as the mainstream press advocates. This byline up here is Bloomberg. Pension funds reel from falling yields. A once unthinkable collapse in global bond yields is forcing pension funds to buy bonds that offer negative returns, putting the financial security of future retirees in jeopardy. Enough said. Think about it. Well, moving on a little bit on the silver side, or actually still sitting on precious metals. Franklin Sanders, who produces the Money Changer, which you're looking at now, just interviewed me recently, and we went through a lot of things. I won't read the whole article, obviously, but we talked about, and most of these are highlights, of course, was gold breakout that I've been talking about for a long time, as well as him, what the volume looked like, which is important. Talking about we're going to see, I think, the biggest leg up, where I've said this statement over here on the right many times, and we're seeing gold's rise not only in U.S. dollars, but basically every major currency out there. The bull market shakes off as many people as it can. I think it's important that you understand that. So if you have a position in gold or silver or both, hold on tight. And the gold-silver ratio got up to about 95, as you can see here, and it's dropped below 85 temporarily outside of that channel, which is a good thing. And I do still think that silver will outperform gold in this next rally, which isn't just the current one that's probably going to subside here shortly. I'm talking about the major leg up where 90% of the move comes in the last 10% of the time, potentially. Talked about the HUI, as you can see here. Still got a long ways to go relative to where it was in 2012, and I think that point will be taken out at some point. It certainly won't be this year, but it will. Then we discussed platinum, something that very few talk about. I swapped gold for platinum recently, pretty much at a good opportune time, and platinum is starting to move here in the last few days. We'll see if that trend continues or not. Palladium, went through the big story on palladium, which few people know. Got into palladium way down at a low and rode it all the way to a measly 1,000. So certainly should have held it longer, done better. Nonetheless, this looks like a double top. I don't think palladium has nearly the potential platinum does at this time. When I recommended palladium, I obviously thought it had a lot more potential than platinum, and it did. So, get back to the platinum story. It's at lower than the 1982 bottom. I think it's got a long ways to go if you're so inclined. And again, talking silver, gold, platinum, palladium during this interview. Also, and obviously Franklin likes to look at technical work as well as myself. And you can see where we're breaking through this level right now in the platinum market, which I think it's over 900 as I'm doing this update. And moving further, the Morgan report will be out this weekend. I am doing this actually on Friday after about 12:30 in Pacific Coast time. And just real briefly, I won't share everything, but discuss the current conditions and what you should be doing, I think, at this point in time. Then we went on to those certain companies that make money in the gold and silver sector practically no matter what. Did a huge review on those. And certainly something, if you're serious about this market, you should be invested in those type of equities because they're almost guaranteed to make you money. And then, of course, we've been covering the blockchain, the AGX coin, quite a bit. And then David Smith was up at Sprott, did an interview, And then we updated some of the juniors that we do, letters to the editor, of course. And then at the end, put in some of the interviews that I did during the week. So you can always get those for free on themorganreport.com. Just go there and put in your name and an email, validate that, and you will get interviews that I do during the week sent to your email box on usually 2 or 3 times a week. And then you'll get this weekly perspective that I try to accomplish every week for you. So until next week, remember there's nothing more powerful than the truth. And I want to remind everybody, now is the time to buy golds. Now is the time to buy silvers. And what does that mean? Now is the time to get back into the resource sector. And the best part of the resource sector currently are the precious metals mining shares, top tier, mid tier, and speculative side. They've already moved quite a bit. They'll probably correct at some point. But if you get in at, let's say, under $20 silver, you will probably be very happy 3-4 years out from now. So that's it. I'll be back with you next week. Hello, I'm David Morgan, publisher of The Morgan Report, and as some of you may already know, The Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in The Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.